Hello, my name is Dave Coker. Welcome to the panel discussion. Now, before we get into the case study, and it's a really fascinating one, I'd like to introduce my esteemed colleagues on the panel. Jan?
Yeah, hello, my name is Jan Redman. I'm from Stockholm, Sweden. I'm partner at Accenture and heading our Nordic Finance and Performance Management practice. I have a long history in finance. I worked as controller and finance director and CFO also for a fairly large company before joining Accenture.
Hello, my name is Marius van Jaarsveld. I'm a partner with Deloitte. I'm based in Moscow, Russia. I'm focusing on business transformation for large multinational companies. Previously, I've been with Deloitte in the Middle East, South Africa, as well as in the United States. Dave, we're talking about aeroplanes.
Excellent. Yes, sir. Yeah, we got a really good case study to talk about. We're going to discuss Freddie Laker's airline called SkyTrain. And it was the original discount airline, started up in the early 1980s. And at that time, airline ticket prices, I should say, were actually discussed by the carriers and agreed, and then they approached the government who signed it into law. So the markets were very, very different compared to what we're used to now. So Freddie Laker wanted to change all that, and after a 6-year legal battle, he finally won the right to sell tickets between New York and Heathrow. And his planes from the get-go were packed. He was running over 80% capacity compared to about 50 or 60 for BA and the other flag carriers. His tickets, it's easy to understand why he was so successful. His tickets were much cheaper. He was only charging about 60% discount compared to what the other flag carriers wanted, but Laker charged for everything. So much like SkyTrain, much like Ryanair now, would charge you for bags, would charge you for breakfast, would charge you for a newspaper, absolutely everything. But regardless, his business was an incredible success right from the get-go. And he had some problems, though, because Laker booked his costs in U.S. dollars. So he had fuel costs and he had airline costs, the cost of his planes, in U.S. dollars. But at the same time, his ticket sales, because he was selling into the British market, were booked in pound sterling. So he had a mismatch there. And certain things happened globally that he couldn't have foreseen, or at least he didn't foresee. At that time, the U.S. economy was in the toilet. America had just pulled out of Vietnam and effectively had lost Vietnam. The U.S. had lost some hostages to Iranians in the U.S. embassy over in Iran, and there was a crisis of confidence, not only in America, but also in the wider global economy. So the dollar was depressed, significantly depressed against most currencies, pound sterling included, when Laker launched his business. Now in 1980, late 1980, and culminating in early 81, Ronald Reagan was elected, and America started to flex their economic and political muscle, and because of that, the economy started to boom, currency increased in value, and Laker's dollar-denominated costs increased sharply, even as his revenue, his ticket sales remained constant, being booked into pound sterling. He ended up in bankruptcy. It was a very sad story. So we're going to talk about 3 possible alternatives that Laker could have engaged in. One would be, that we'll throw out to the panel and see what they think, would be, don't hedge at all. That's effectively what Laker tried, but is there a way that he could have engaged in that and still been successful? Another opportunity would be possibly to hedge both sides of his currency exposure. So hedging out the dollar, sterling, or cable exchange rate, and that's a possibility as well. And finally, the third possibility would be to raise prices. So gentlemen, I'll turn it over to you. Let's have a chat. What do you think?
Well, I mean, he was clearly the first mover in this market, and these days there are a lot of low-cost airlines out there, but he was creating a market. So an interesting story, a sad story, that obviously he did a lot of things right, and also filled his planes and started the market. It seems like he forgot a few important things in running a business. He probably were, occupied by the operational things, running the airlines, selling the tickets, and forgetting the impact on his cost basis, obviously.
It's very insightful, Jan, because he was the pioneer. He foresaw this. Keep in mind, back in the 80s, it was a government-run operation, airlines. And he invented things, or he came up with the idea first for a lot of things that Michael O'Leary from Ryanair gets a lot of static from, charging people to use the loo. Well, Laker was doing it, charging people to book bags, and actually for breakfast. He would charge you for breakfast, and they were doing it. Now, of course, if you go on a full-service airline, you're still used to the idea of the cart. and they're not charging things. So it's interesting that he collapsed, even though he had all that insight.
Yeah, yeah.
I think it was clear he was an entrepreneur, right? He was not a banker. Okay, so hedging perhaps was not on the forefront of his mind. But I think in a business like this, he was ideally positioned to do a natural hedging. As you mentioned, Dave, is that the majority of his cost was in dollars, his revenue was in pounds. To move some of his revenue in pounds into dollars might be, for us, in hindsight, the obvious thing to do. So slack your campaign, your advertising campaign in your your pound-based country. So in the UK, come down on your marketing campaign, but ratchet up your marketing campaign in the US. Get your dollars flowing in the US, get your revenue flowing in the US, and problem solved. Yeah, it's very easy for us to sit 20 years or 30 years behind the time and have this discussion, but it's quite an obvious thing. And I think it is one of the lessons that one can learn out of there is that you don't always learn something about success. You sometimes learn about failures as well.
Exactly, yeah. And it's fascinating you mentioned that about that, but the idea he could have done opportunistic pricing. He could have sold more U.S. tickets at the same time ratcheting down his U.K. sales.
Right.
And by any accounts from what we've read, what we saw in the case study, he continued to focus on the U.K. leisure market. That is how he generated his money. So his business model was relatively inflexible. It was set up and he was going to execute that business. And it's almost like he didn't tweak. He didn't do anything.
Exactly. It seems also, I mean, as you say, Marius, he was an entrepreneur and very focused on his idea. And maybe he didn't have a board either that gave him sort of good advice or look at the sort of broader perspective of running a business.
Exactly.
So there are probably a number of things he could have done. And as you say, he could have been more flexible in the sort of how he got his income in different currencies. Perhaps he could have. I don't think I remember back then that the dollar was very cheap, and I don't remember though whether it increased very quickly or if it took a long time for it to recover. But it probably took some time. It didn't just. So there could have been sort of some time to take actions. When they saw the problem coming and the dollar strengthening value. So there could have been time actually to do things. It seemed he didn't. He didn't even consider raising the prices. I think today it's different. Many companies are having some sort of currency paragraphs in their pricing. Say, okay, you buy your ticket, you're going to travel in 3 months. If the currency is different, you may pay the difference.
Yeah, it's interesting about raising prices because that's obvious, and all the carriers in the UK were exposed to the same pricing problems, right? They generated revenue in pound sterling, but their costs, fuel costs, were priced in dollars and still are to this day for jet fuel as well as planes. So why didn't he raise prices quick enough? It's really interesting that he didn't, and it's almost like he had this model. He was going to execute this model and just be very inflexible. So it gets back to what you're saying about that he was an entrepreneur, not really a businessman.
And perhaps an old school entrepreneur, you know, what he promised his customer, that's what he's going to deliver. And I think that was his focus, and perhaps that was his downfall as well. At the end of the day, is that he didn't adjust to the changes in the market, you know. And I think nowadays we're much more used to changes. I mean, if you look at the dollar, in July it's $134 a barrel, and in September it's $34 a barrel,
yes.
Right? You know, and I think we're much more exposed to these kind of changes currently than perhaps 20, 30 years ago.
It's interesting you mentioned old school entrepreneur because those folks almost had an honor. They had honor, right? And now the businesses shift the risk to us. You mentioned about that they have a paragraph to raise prices, and maybe you can afford that holiday and all the other stuff that goes along with it. When you look at the tickets and you go to book them, when you finally get the bill, the final bill, you're surprised because fuel costs have spiked up. You mentioned the 2008 bubble that we saw, and prices went up dramatically, 70% in about a 6-month period.
Yeah.
So they've shifted the risk into the consumer now.
Yeah, it's sort of how it works. So no one is really surprised today that these things are there, but maybe 25 years ago it wasn't common, and I think also perhaps it was different whether you were in this sort of consumer business or business to business, how you dealt with currency changes. But I think obviously looking back there were probably many things he could have done if he had been realizing the issue that was coming.
Exactly correct.
One lesson that I picked out of this is take some time and stand back. Look at your business overall, because as an entrepreneur, he did everything right. From a delivery perspective, he did everything right. He overlooked, I think, a fairly major component, but I think he was so focused on running his business that he didn't stand back, didn't use his board, if he had a board at that stage, to look at the business in total and to anticipate that the dollar is starting to rise, and we have to act accordingly.
That's a very good point, because nowadays in business school we actually teach people to, as you said, to step back, to build a framework underneath them so that they're not doing everything. And actually the most successful manager doesn't have a job because people underneath him or her are doing all the work. And it sounds sort of like we're making a joke out of it, but we're not, because that's the most successful business or entrepreneur, because they can look external to the business at that point and anticipate these changes, as opposed to being very focused internally with the enterprise and dealing with all the little crises that come to fruition. They've got other people to do it.
The difference between the CEO and the COO in a company.
Exactly
what you referred to there.
Yeah. But it's interesting in this case is that he did a lot of things right, definitely. But some sort of the learning here is that one little thing in the whole perspective of running a business sort of killed it for him.
Exactly.
So the importance of having the broad perspective and having what are the risk components of running this type of business. I think today most people have a pretty good view and try to mitigate risks in a different way. And I think the different solution alternatives here were all about sort of mitigating risk in one way or another. And even if one wouldn't do sort of hedging in the way proposed here, there are ways of anyway try to operationalize minimize the risk by how you manage your cost and revenue.
Yeah, it's worthwhile pointing out that Laker wasn't the only one to get bitten by this. Kodak in the United States, they almost went under as well. It was very big news in the States, primarily because of exchange risk. They were generating most of their revenue external to the country. All their costs, because they were building film, they had big factories in the States to build film, and they almost went under for the same reasons. But they had a little bit bigger presence, and of course they're publicly traded, so they could turn to the equity markets and avoid the disaster that took SkyTrain down. So a very interesting discussion, gentlemen. So once again, it seems like we understand that there wasn't really enough depth in management, and that there's different things that they could have done differently, perhaps a little bit better, that we've got the benefit of hindsight and 20 odd years, 30 years, actually can see things differently. Once again, I'd like to thank you for attending this panel discussion today. My name is Dave Coker.